What's up everyone, Zoeb here from OneGlanceTrader.com and welcome to the final part of my four-part series on the pros and cons of trading the zone recovery trading strategy. And if you're just tuning in, I strongly recommend that you click the link in the top right corner or in the description below to visit the playlist so you can watch the whole series in its entirety. So let's get to it. So before I walk you guys through the pros and cons and my kind of overall experience with this trading strategy, I wanted to just walk you guys through the 10 trades and some stats behind of what we found over the last 2 weeks. So first and foremost, each of the initial trades we opened and the overall cycle all closed out in a profit, and they all closed within the first 24 hours, which is brilliant. It's good. Didn't want to be in the market for that long, and things that contributed to that was the ADR, and taking the trades early where the ADR was 80, 90, 100 pips, and it only done 5 pips of its move or its average move by that point. And as well as using the MAs, trying to gauge the direction, a little bit of technical analysis inside there, and all of those contributing factors helped us, along with the small recovery window and the small take profit target. So the market didn't need to move that much to be able to get into a profit. In hindsight, probably what I would have done is had a bigger take profit target of like 15, 20 pips maybe, but I did want to kind of close the trades out all in the same day so I could have a new initial trade every single day to kind of show you guys. Um, it wasn't all plain sailing, as you guys saw. Not all 10 trades just hit its 10 pip take profit target. There were 4 instances, so 40% of the 10 trades that we took did open at least one recovery trade, with day 4 opening 5 recovery trades, and day 4 saw opening 5 recovery trades, and day 4, you guys listened to it. I really wanted to go short, and if I went short, we would have closed out without any recovery trades. But I'm glad I didn't. I'm glad I went against my instincts, so we could test stress this system rather. So that was really good. It was really good to kind of see that, and that 5 recovery trades really brought the average number of recovery trades per trade or per cycle up. So two and a half recovery trades per cycle, which then, I know it's not a lot of data, it's only 10 days, but kind of gives you a view on the average amount of recovery trades each cycle is gonna open. But we're probably looking at about 6, 7, or 8 of them. So yeah, so that was quite interesting from that. And I was also glad that I used different currency pairs. So we used 5 currency pairs in total. Again, there was a couple of others like GJ and all these things that I went through in day 7, day 8, I can't remember now, where it wasn't opening the pending buy stop or sell stop. And just to let you know, I have been in communication with the owner of the EA. He's been very responsive. He's asked for a few more questions from me, which I've answered, but I still can't see why it's not opening it straight away, and I'm sure there's a reason for it. Just working through that at the moment, but I had no issues with the EA from in terms of taking trades and closing out trades and all that good stuff. It worked relatively well and did exactly what it said it was going to do. So very happy with that. So now let's go through into finally answering my subscriber's question on the pros and cons and my experience of the zone recovery trading strategy. He does know that I've spent 2 weeks testing the system, and I'll be creating a series out of this. So hopefully, the reason why I've created this video is for him. So hopefully, you found this very useful. So I'm going to start with the cons. And as you would imagine, the first con is, and as I like to put it, your next trade could be your last trade. And we've talked about risk of ruin before on this channel. And, you don't really want to go to sleep knowing that you've got a trade on which could potentially open 7, 8 trades while you're sleeping, and you could wake up with the margin call. It's not by any stretch of the imagination is the way you should be trading, especially if you're trading for a living or trading for a side income or whatever it is that you're trying to do. It's definitely not something that you should do, especially if you've got serious capital involved. The second thing is, you could do this manually, but without an EA or some sort of recovery system management type of EA managing everything once you set your trade. It's very difficult. Again, I've got a day job, and you're not aware, or things could happen inside when you're sleeping, especially when I was in the UK. It was opening trades at like 3, 4 in the morning and things like that. um, and and yeah, that's the only downside to it. Again, I've been toying with the idea of my team to create an EA, because again, I'm conscious that the EA that I use is not free, and all this type of stuff. But it's something I'm thinking about. But it's just something to bear in mind, that if you wanted to implement this strategy, is that you do need some sort of an EA to kind of manage the kind of process for you. So yeah, there are only two cons, and there are about 3 or 4 pros. But these two cons definitely outweigh the 4 pros for the system. So don't it's not a quantity over quality. It's definitely a quality over quantity. So please bear that in mind. So in terms of the pros, you do actually need little or no trading experience to kind of do this. You just pick a direction, set your initial lot size, and you've got to set up some settings in the EAs that if you did open a recovery trade, what lot size and stuff you wanted to go in the recovery window. But other than that, just let it go, and that's pretty much what I did. Again, I was just using M8s, and I know there was some more logic put into that because I've been trading for a number of years. I kind of put some other stuff that probably didn't come out in the video, or was just second nature to me, and I probably wouldn't have done those things if I was a newbie. But you know, what did I get? I got a 60% win rate in terms of hitting its first take profit target, and I'll caveat again, it should be 70% because of day 4. But even then, it's like I still closed out everything. My wife picked one of the days in which way to trade, and we still closed out with the profit. So it is true that you don't need to have a lot of experience with the forex market, because the kind of strategy of the system, which is built, which the EA took care of effectively, kind of managed all of that for me. So yeah, that is true. You don't need a lot of experience to kind of trade this approach. The second thing is it's all about the recovery piece. There's a lot of flexibility you can do about it. And this, go back to the first con, is that the next trade could be a last trade. That will always be the case as long as you don't put a stop loss in. However, with the recovery piece, there's a lot of flexibility you can put in there. The first thing is the recovery window. So mine was 10 pips. Yeah, it could be 20 pips, could be 100 pips. So there gives you a bit more flexibility to kind of give it some room to breathe. The second thing you can do is you can change your take profit target. Again, I had 10 pips. I could have caught bigger moves to make bigger gains, but then it could have gone against me and it might have not hit my take profit target. So there's those type of pieces as well. And the EA, to its credit, the one that I used and I showed throughout the video, it has all of that stuff built in, and where you can kind of do all that. And another thing which is quite important is that, again, I use the martingale approach. And I never recommend the martingale approach. It's just, again, I was doing it on a demo account, and but you don't have to double the lot size. So you can do, let's just say you went in with a 1 micro lot, it could be 1.5 micro lots instead of 2 micro lots, the second trade. So there's a lot of things you can do there to kind of reduce your kind of margin that your account's eating up throughout the one cycle. The other thing that you can do, which I didn't test before, is, as you guys will remember, is my when a recovery trade has been initiated, my take profit target reduces from 10 pips to 5 pips. Now, what you can do, and again, it's all, can set this up in that EA that I used in the video. You could actually say that if a recovery trade is open, once my overall account balance for that cycle is at break even, get me out. Or what you can do, you can even say, is actually, I don't mind taking a 2-3 pip loss. Just, let's say you put -3 in the EA. If recovery trade is open, you accept the fact you are going to lose -3 pips. And because you got a 10 pip profit target, as long as you're right more than you're wrong, i.e. you hit your take profit target before recovery trade is initiated, you're gonna make gains in the long run. And even if you did hit recovery trade, you're taking a small portion of your account size. So again, there are ways to kind of mitigate the next trade being the last trade, and that is something to think about. Something to think about, that if you can get you know, a win rate of the initial take profit target of above 50%, then you can play around with that kind of flexibility of those things to actually get out at break even or get out with a small loss, because the the less return you try to make on the recovery, the shorter the distance the pair has to move to accumulate that kind of profit. So again, another thing to kind of bear in mind in terms of, you know, when you're trading this approach. Um, Another thing is how many times have you put a stop loss above the highs, and price initially starts going in your favor and then goes against you, takes your stop loss out, then reverses and then goes right back down to where you think it was going to go. And that's happened a couple of times in out of these 10 days for me, where this approach doesn't really make that much difference because you're not exiting the position, you're just opening a hedge trade. And if it did, you know, initiate the hedge trade, then reversed and went back in your direction, then you're fine, because it would have just opened another trade on the other side and then got you out at your accumulated profit. So again, you don't need to be, you know, whether you're doing, you know, hidden divergence or regular divergence, or, you know, pin bar pullbacks using any of my indicators, or trend trading using the OGT trend dashboard, you can use these type, or you can use this money management type strategy to kind of, you know, profit for when you get those type of signals. But again, take into mind the cons as well, because from that side. And one last thing here is that I want to say is, the only time I would even consider using this type of strategy, and again, I probably wouldn't, but I probably will, just because, you know, I think it'll be good content for you guys, is that you can potentially use this strategy if you've got a small account. So if you've got, you know, a 200, £300 dollar account, and you're trying to risk per trade 2% risk and all these type of good things, is that it could take you a long time to make any decent amount of money to be able to actually go do things you want to do with it. Because I know what you guys are like on my channel. I know what you guys, you know, you're chasing the money and you want to, you know, quit your day job and all that stuff. And there's nothing wrong with that. There's nothing wrong with that. And but you can't really do it with a $300, $400 account if you're not prepared to take some risks. So if you're going to use this strategy, I'll do it with a small amount of money. And the biggest caveat is, if you're going to put any money in there, um, make sure it's something you can lose. And one thing I was thinking about doing for you guys is a video around not money management from a trading perspective, but money management from a personal finance perspective, to be able to you to risk, you know, a portion of your salary or whatever it is that you make your current income with, to go and trade, and to put more risk on that money to kind of double it or grow it. And you know, it's things like this that I'm starting to look at now, considering the emails and the questions I get from my subscribers. Is this type of stuff that you guys want to learn how to take a small account and kind of grow it, and then start putting in the better practices to preserve your capital. So we'll be looking into that into the future. But again, that's one of the things where you can potentially use this. And in terms of, for me, kind of going forward, I'm more than happy to kind of, you know, test that approach and put, you know, £200, £300 dollars or whatever into a live trading account, and just let it do what it needs to do. If I lose it, I lose it, and then you guys can see firsthand that, you know, it's not that easy from that side. But if it works, great, and we'll see how it goes. So I really hope that has answered my subscriber's question that sent me an email. Thank you for sending that. And guys, if you've got any ideas or anything you want me to kind of investigate and look at, I'm more than happy to do that. And please, you know, I've put some thumbnails up of some other series and journals that I really like. And again, please check out my Forex scalping course. I've had some great feedback on that so far, so thanks very much, guys. And you know, take a click on one of those thumbnails, and I shall see you guys in a second.